Hey, so welcome in, everybody. Today, we're going to talk about the most recent OPEC report and what is lying ahead. Obviously, with the news last week, there's been a lot of de-escalation on geopolitical premiums. And today, we're going to talk a little bit about OPEC, its strategy. It is bringing barrels back to the market and what might be in the future for oil markets. So let's get to it. Listen, OPEC just blinked. They are showing a geopolitical and global outlook for GDP 3% in 2025, 3.1% in 2026, and oil demand over 105.1 million barrels a day in 2025, and looking at 106.5 for 2026. Now, economic momentum is steady despite trade tensions and high debt. Demand led by Asia, China, India, and the Middle East. The Middle East is growing significantly, by the way. And OECD demand is slowing, but non-OECD gains offset those declines plus some. So that's the real key, is to evaluate not just mature economies in Europe, in North America, but you take a look at some of the other growth areas. For instance, there's phenomenal growth happening in Africa. So, pardon me. So when we're looking at global GDP growth, these numbers are significantly higher than IEA. IEA always shows a different number than OPEC. And sometimes it's higher, sometimes it's lower. It's almost always lower. So OPEC usually has a different number than IEA. And going into 2025, those numbers were almost double. OPEC's numbers were almost double in terms of growth. Now, the answer sometimes lies in between those numbers because there is a different methodology for counting what supply and demand mean. It gets into a different accounting game as far as, are you including liquids production, condensate production, which is less energy dense, doesn't produce higher end products like jet fuel, diesel, distillates. Well, it can in some minor circumstances, but these are some of the, are you including those liquids? Are you including a different classification of liquids? And do you have a different tier of those liquids? Then when you get into consumption, there's also the similar, what are you consuming? Is it crude oil into refineries? Is it crude oil on the other side of the refinery, such as the refined products? So, pardon me. So when we're looking at global growth, it is showing that 2026 is going to be higher than 2025. Now, 2025 has exceeded expectations in a big way. China is a big reason for that, but China is also stockpiling crude oil, so you got to watch for that. So OPEC production on a snapshot. This is the September report from OPEC. They are releasing the October report sometime this week. I'm not sure which day, but we're updating you right before that release, and we're going to be pouring into it. And I've got something at the end that you might want to pay attention to. So the OPEC output was an increase in August by 500,000 barrels a day. And in case you haven't been watching the news, OPEC has been unwinding supply cuts that they made back in 2020, 2021, 2022. There's a multiple rounds of cuts that were put in place, and these cuts are being unwound and put back into the market. So there was a sharp increase in August, but I'm going to show you something at the end that you're going to be kind of interested in. So it's roughly 42 million barrels a day, 42.4 million barrels a day. Now, what are the key changes? Saudi Arabia by 197,000 barrels per day. UAE by 199,000 barrels a day. So Iraq, 50,000, Nigeria, Nigeria actually went down, but that's because of disruptions and maintenance. That has since come back online, and I'll show you at the end where that is. So OPEC production discipline is improving, but compliance is uneven. What I would say is, and again, I'm going to point to something at the end that is going to put it through a different lens, that is going to show our quotas actual production. So that is a key question to have. So supply and demand balance. What is the call on OPEC crude? Well, it's currently steady, 42.5 million barrels a day in 2025. 2026 is only up 600,000 barrels a day in 2026. The signals are continued reliance on OPEC barrels. And if you look at where crude oil prices are and the US crude, and I'll show you that at the end as well, the signals are there. Non-OPEC crude is not growing, and it's not set to, and it's not going to at $50, $60. I'd even argue at $70, it's not really set to grow. And global inventories do remain about 70 million barrels below the 5-year average. So we're not really adding a lot of barrels to the market mix. Now, one thing that is not in the numbers is China's inventory. They are currently building out their SPR. So they've been adding tanks, they've been adding underground tanks. So this tight market, it's tight because China keeps buying. So um, so the tight market, if demand holds, gives upside risk from supply disruptions. And I would say when you look at the geopolitical risk premium, of course, the Israel, Gaza, Hamas, Iran peace negotiation or peace ceasefire is very good because obviously everybody wants peace. I want peace. Please be peaceful. It de-escalates the risk factors in the area, but I do want to point out Israel and Gaza. This is not really. It's right over here on the Middle East map. But if you look at where most of the production is, Saudi Arabia, United Arab Emirates, and this is the Strait of Hormuz down here. That is where it's really kind of tracking some of the supply, and that's what to really watch for. So the global inventories are increasing, or not increasing. They're below the 5-year average, and there is a tight market, but that's if China's imports stay at that same level. So why tracking OPEC matters? OPEC controls 1/3 of the global supply. It's a major price influence. So if production drops, if production rises, that is going to swing the markets. And we are in an oil market that out of 104 million, 105 million barrels a day of supply and demand, 1 million barrel, 1% moves the market, whether it's a supply disruption or a demand decrease. So every percentage matters. And when you are looking at the Strait of Hormuz, which let me show you that. If you go to marinetraffic.com, which is a great, it's a great mapping system. If you look at the Strait of Hormuz, which is right here, I'm drawing with a kind of a light green. So the Strait of Hormuz is right in here. That is a choke point. The other is Suez Canal. Of course, some of these ships actually drop off, go into a pipeline, and go that way. But Israel and Gaza over here, that's not where the oil flows are. The oil flows are over here. Now, the concern with the conflict was that Israel did attack Iran. They did attack in Yemen. They did attack. The U.S. actually attacked Iran as well. So when you're looking at the potential of strikes in here, Iran produces a lot of barrels, and those barrels go into the market right there. This is roughly 1/3 of the world's supply is in this region, and 20 to 25% goes through this Strait of Hormuz. So that is kind of the real concern there. But when we look at the OPEC spare capacity, this is a critical something that you should be monitoring because it is going to move oil markets. And let's put it this way, back to the 1%. If supply or demand becomes imbalanced within 1%, you are going to have an increase or decrease in supply. That moves the markets 5, 10, 15%. That 1% of supply or demand imbalance moves the market by anywhere from 5 to 20%. So that is a significant volatility, and that shows you how tight that balance is. So if you follow oil markets, if you're a producer, hedging your output or understanding this is going to come key so that you can predict your cash flows. If you're a trader, hopefully you are tracking everything that is happening with OPEC and everything that is happening with US production, South American production, and consumers. This will shield you from those potential shocks. So if you're aware of what is happening, you can take preventative measures so that you can protect your purchases. So every quarter change shifts both physical balances and the market sentiment. And that's why we track it here. So bullish factors and bearish factors on the outlook. Inventories are below the 5-year average on the bullish side. Rising demand into 2026, that's bullish. Potential geopolitical disruptions in Middle East and Africa, these are all bullish. On the bearish side, you have non-OPEC supply growth in US, Brazil, Canada. My view, OPEC keeps quoting this. My view, that's not going to happen. Brazil, maybe a little. Canada, maybe a little. US is not in a growth path. China's slower import pace. If they stop taking barrels in to fill their storage, that is going to disrupt the markets because it's going to be more barrels chasing fewer markets. And an uncertain OPEC plus cohesion and quota management. So listen, who am I? I'm Brian Pieri with energyrogue.com, and we actually track OPEC in our product, and this is what we do every single day. And if you go out to our website, and it is linked down below, and you go right here, you will see, you can see some of our comments where we've been featured, some of our producers, consumers, traders, and Rogue Radar is $89 a month, and it is well worth the investment because inside Rogue Radar, you get a video at the beginning of the week for our Monday game plan. You also get our Rogue Radar, which gives you a report. And in this report, we have a convenient red light, green light system, plus an extensive write-up on what is happening out in the marketplace that tells you, for example, on crude oil, commercial stocks, oil and product stocks, what the global supply, global demand, everything looks like. And this comes out once a week, and Monday comes out Monday morning, and you get a video as well. But that's not all. That's not all that you get for $89 a month. You also get crude oil radar, which is going to give you all of this. So every day I update the market, my thoughts on the market. Now, I am a commodity trader. I've been that way since the mid-1990s. I've traded natural gas, petroleum products, crude oil, natural gas liquids in the physical market and the financial market. And so I update this every day. It's my opinion. We also have an AI summary that summarizes the market for you. It takes into account technicals, fundamentals. It takes into account international oil analysis. And this is what I wanted to show you. Every month or every day, this scans for the new OPEC report, and it gives you a summary of what is happening on world production, the non-declaration of cooperation countries, and the Declaration of Declaration of Cooperation production. So this is significant out in the marketplace. It gives a supply-demand balance, production landscape, OPEC's strategic positioning, forward indicators, and it gives you all of this. It reads through the report for you, and if you haven't read the report, it's about 100 pages long. So this scans the market every single day and gives you news analysis. It reads hundreds of articles, Fibonacci, machine learning price, and AI analysis. So listen, if you're serious about energy markets, then there's a link down below. You can try it for 14 days. I'm looking forward to seeing you inside. And listen, thanks so much for joining us. We try and keep these short and to the point, mainly because time is money and money is always moving. So listen, hope you have a fantastic day, and we will talk to you soon.